Hello, everyone. My name is Philip W. Dunn, Program Manager with USBC, and I want to thank you all for joining us today. I'm so very excited to continually bring you all some very valuable and informative programming. Many of you have attended several webinars throughout the year, and we're so very appreciative of your engagement and feedback. Now, today, we are pleased to partner with Brex, one of our newest partners, and they're very eager to introduce their company to you, to our USBC business constituents. Today, we have two very dynamic and engaging representatives leading the conversation on how to track your dollars. That's right, your business, you need to learn how to track your dollars. We have with us Erik, Zhou, who is the Brex VP and Chief Accounting Officer, along with Brandon Sidney, who is the Manager of Community, Culture, and Diversity at Brex. Now, they're teaming up to bring you some very valuable information. Let me tell you a little bit about Erik. Erik is the Chief Accounting Officer at Brex, and Brex, I should tell you, is a financial services technology company based out of San Francisco. And in his role, he manages all aspects of financial operations and accounting. This includes regulatory reporting and tax compliance planning. And he started his career at PwC's banking and capital markets practice, and he built his career in over 11 years of experience working with banks, working with broker dealers, working with large multinational financial institutions. He has a focus on complex financial transactions, regulations, and day-to-day client operations. I should also mention that Erik is a CPA, a certified public accountant who holds a Bachelor of Science in both accounting and finance from Georgetown University. He was born and raised in New York by two immigrant Chinese parents who happened to be restaurant owners. I didn't see where Erik is a cook on his resume, but I'm hoping that he picked up some skills there. He continues to occasionally assist with their financial planning and management, so he understands everything that he's going to share with you all today. He understands all the challenges that you face in tracking your dollars, and so he's going to help us out there. Now, Brandon Sidney, he is a community, culture, and diversity curator whose mission is to create spaces that enhance the visibility and the experiences of underrepresented identities. He specializes in events and multimedia content production, and he's cultivated connection and employee engagement for companies like Facebook, you may have heard of them, and Airbnb. And he currently serves as the Community, Culture, and Diversity Manager at Brex, where he is building the company's culture and community for over 700 employees. Now, Brandon was born and raised in the city of Chicago, Chi-Town Stand Up. Brandon grew up witnessing entrepreneurial ambitions within the Black community, such as his mother, who balanced her passion for organizing events and decor with her 9-to-5 job at Chicago City Hall, and his father, who performed music while juggling his day job. Now, Brandon's early exposure to entrepreneurship has given him a much deeply appreciated view of individuals following their passion. So many of us share this same view. We witnessed entrepreneurship growing up, and we have this deep passion for it. So we're so glad to have them both, and we're proud to have Brex as a partner to USBC. And now I invite you all to pay close attention to the information that Brandon and Erik will deliver. So we will make room for you to have Q&A near the end, but feel free to use the Q&A function, use the chat function. Let us know what questions you're having. Let us know if you have any questions about the content that Erik and Brandon are going to share. So Brandon, how are you today, sir?
My day is great, and thank you for that great introduction. You made me sound way cooler than I am, so I appreciate that for sure.
Oh, I'm definitely glad to have you. And with that, I'm going to go ahead and turn it over to you, and we're going to get started.
Cool. So thanks, everyone, for joining us. I'll give you a little information about Brex. Brex is a financial technology company, aka FinTech, in which we want to be the one-stop shop for all of your business financial processing needs. So anything from bill payments to credit cards, reward policies and systems, and your spend management technology. We want to put that all in one place, making sure, and part of our mission is empowering business owners to reach their full potential. And we think if we handle the process and procedures of your financial planning, that you as a business owner have more free time to really build and scale your business. So that's one of our mission statements, and which brings us here today as we continue to reach out to our communities, potential business owners, entrepreneurs, and making sure that we are providing the tools and resources and educational systems for you all to build and grow your businesses. So I am so pleased that Erik is with us. He's going to run through some things for us. On our agenda today, we'll be talking about how to track your dollars. But we do want this to be conversational, and we do want to make sure we're hitting all of the topics that you all would like to discuss today and that are relevant to those who are with us. So please use the question chat box, the Q&A forum, and I'll be scanning those and presenting those questions that you propose throughout the time that Erik walks us through the presentation, because we do want to make sure that this topic is curated for you, for the audience that we have here today. So I'll pass it over to Erik and we'll get started.
I just want to say thank you big time to Philip and Brandon. The warm introduction is too much, but I'll take it. So thank you. So before we just get into the topics at hand today, I do want to just read out this disclaimer. The information provided during this presentation does not and is not intended to constitute legal, tax, and financial advice. All information, content, and comments shared during this presentation are for general informational purposes only. Brex does not provide, nor does it guarantee, any third-party product, service, information, or recommendation. Brex may pay third parties and or be paid by them for customer referrals. I had to get that out of the way. You can talk to the lawyers at my company for coming up with this. You know, it kind of comes with the role here. So jumping into the topic at hand, which is talking about how to automate your bookkeeping and keeping track of your dollars with technology. There's a few things on the agenda that I'm going to go through. So thinking about what your processes are today, understanding how to more efficiently track your revenue and receipts, managing your expenses. That's probably the biggest part of my job at Brex. Actually, we've grown to a much larger company than when I started, and the expenses start piling up as your company scales. And then thinking about all these things with your processes, revenue and receipts, and expenses, and centralizing and integrating all of your tools and processes together across your technologies. And the one thing I would be remiss if I did not say was, and I've kind of lived by this ever since I started studying accounting, cash is king. Like understanding where every dollar is in your bank account and being able to attribute those dollars and why you have them and where they're going is really important to just day-to-day business management. And we'll go into a bunch of different tools where I think the underlying concept is being able to do that. So the one thing I will just also reiterate, which Brandon touched upon, for these kinds of sessions, I highly encourage the various members of this audience to ask any questions that come to your mind as they relate to your business, and I'll do my best to try to help answer those questions. Philip mentioned before, my parents have indeed run Chinese restaurants for the past 15 years. And before that, they actually failed at a few businesses and restaurants too. So I've kind of seen the gamut of issues that small businesses may face when it comes to cash management and thinking about tracking their performance. Although I am not intimately familiar with every single business model that is represented by members of the audience today, I think in general, there are many common themes in business management that may be helpful that I can provide some light on. So I think before I get into a host of these technological solutions that are available for business owners today, it's really important to also make sure that whatever tool you end up deciding upon or whatever tool you're assessing for use in your business, that it works for you. It's got to work for your process as it is today, or perhaps what you're aspiring to for your process. That's a very generic way of saying, sometimes if you have a process in place and then you think technology is going to solve it all just by signing on to technology, that may not always be the case. Oftentimes what I've seen is that if I have a process in place and I want to put a technology on top of it to make it more efficient, I have to make sure that process and that technology can be compatible, that they marry each other, that they fit together to make it more efficient. If the technology has some innate requirement to do something completely differently, for instance, I have to start taking credit cards in a certain way that's different than what I'm used to, or I have to submit payments that are different than what I'm used to through a bank portal or something else. Like for instance, my parents are used to still writing checks when they pay off their expenses. If that's what you're used to, there are technology solutions for that. Like don't pick a technology that requires you to do wires and ACH payments out of your bank portal in order to make it work. That's just to say you're aware of your own business needs. You are the expert in your own business, and just trust yourself on that and make sure that whatever technology you do end up using is leverageable for that process, right? And maybe what you find is that there is a change that I could do. Maybe I shouldn't do as much check writing as I used to. Maybe I should be utilizing the electronic payments feature on my bank portal more. In which case, those are thoughts that you may have for yourself, and you can implement those, and it's a different set of solutions for that. Moving on. So the first thing that I think is really important and is the lifeblood of any business and its performance is thinking about revenue, what kind of revenue you're earning in your business, receipt capture for that revenue, and making sure you can collect. Like half the battle for my own business at Brex is, every day we have customers transacting, and then we are recording the revenue, but then we have to make sure we can collect on that revenue in terms of actual dollars coming in. And so what I've listed out here is a bunch of logos, right? And this is just a snippet of the solutions that are out there. But what you're looking for is for your business the ability to potentially automate the tracking of your revenue and then the automation of that collection. I'll highlight two specific examples on this board just so people are aware. I think most people, well, maybe I shouldn't say that, that's too much of an assumption, but QuickBooks as a tool for your accounting and your books and records is very popular across the small businesses of America. Even my parents, who are immigrants to this country and English is not their first language, this is their tool of choice for managing their business. And the reason for that is because QuickBooks has a lot of integrations or connectivity to other solutions that are out there for collecting payments and for recording revenue. So they will have a POS system, a point of sale system at their restaurant. They don't use any of these, but Toast, Square, Clover, those are all systems that are out there. And the idea is that anytime a transaction happens, right, you get a credit card payment, you collect cash, you collect whatever form of payment that you're willing to accept at your business, it's recorded in Square right away, real time, by whoever's attending the register or whoever's attending to the storefront. All of these systems, including legacy systems that are not listed here, QuickBooks has a way to integrate. Those bills or those revenues that you end up earning get booked into QuickBooks right away on a real-time basis, right? And then once you know that that's revenue you've earned today, you're able to see, okay, did I get all the cash to match up with that revenue for today? How much cash did I not get? For that cash, how am I going to collect? So for that portion, it's probably more relevant to folks that are doing consulting services or don't have necessarily storefronts. For that, I'll highlight the second tool, Bill.com. Bill.com is another tool that can be used to input the invoices that you have submitted to your customers. And as long as you know the best way that you're trying to collect that revenue, they'll go out there and automate the collection of that revenue from your customer's bank account. It requires some coordination with your customer in order to set that up, but it's another way where you can kind of have that going on in the background. You can have the information set up through Bill.com. They connect to your customer, they collect the info, and they'll go ahead and do that collection for you. I'll pause here a bit just because I did just go through a bunch of information, and I do see that there are some questions that may have come through on the chat. And I don't know, Brandon, if there are any that I should focus on. So I see one question, which is, what's been your tool of choice for collecting customer payments? So it will differ from business to business. If you are in a storefront, and you are selling merchandise or selling food like my parents, you use a point of sale system and you collect payments via credit card, via cash. Those are all those kinds of businesses. For the cash, you collect it up front, and for the credit card payment, on a certain cadence that you agree with your credit card service provider, they'll send you the payments on a bi-weekly or a monthly basis, depending on all the receipts that you receive from there. I think another way to collect payments, and a very popular one to use, is Bill.com. That's the one I just mentioned. And so what you want to do for that is, you want to make sure you understand like what kind of invoices you have outstanding. Those invoices you submit into Bill.com, and then Bill.com will go out and get the information requested from your customer, and they'll audit debit their account in order for you to collect your cash. I think that's the best way to answer it. Those are kind of my recommendations. There are other ways to do it, which is to kind of manually follow up with your customers and collect checks or collect payments. But that would be my tool of choice for an everyday small business.
I do see a follow-up asking about PayPal, and what about using that as a tool as well?
And I think that also happens. I think there's, so the thing with using a tool like a PayPal or a Venmo or any of these other solutions that are out there, like, I've used Zelle to pay certain small businesses for me personally. Those are all acceptable. I think at the end of the day, you have those payments coming in and they flow through into your business bank account. For that situation, that's where QuickBooks comes in real handy. So QuickBooks, right, what you can do is they have a bank feed feature. With the bank feed, all it takes is on QuickBooks, you provide the QuickBooks interface, which is safe and secure, with your online login and password for your business bank account. And then anytime cash moves in that bank account, QuickBooks will prompt you to put a reason for what this cash movement is, whether it's money going out the door or money coming in. And if it's money coming in and you know that it's for this certain service or this certain sale or whatever revenue activity that you had, you mark it as such, and it'll automatically book it as revenue for your business. And that's one of the ways that QuickBooks is really neat. Like, it integrates with all these other tools, like I just mentioned on this page. It also integrates with your bank portal. So all the activity that happens in your bank, and right, cash is king, it automatically picks it up through a bank feed, and all you have to do is kind of classify them and label them appropriately. So directly to the question about what about having PayPal? You can have PayPal as a direct source of payment. When that PayPal payment comes through, it'll land in your bank account ultimately, and then QuickBooks will pick up that activity from your bank account, and then it's your job to just label it, versus you fiddling around with your different sources of tracking your payments. You can do it centrally within QuickBooks because you know that it has that direct integration. And then there's a follow-up question related to accounts payable and receivable. And for that, I will forward to the next slide. So the next thing to consider is when running your business, it is hopefully more revenue that you can ever imagine and cash coming in. But there are the realities of when you run your business, there are expenses that you have. You may have employees, you may have other service providers, you may have folks that are providing you with supplies to just run your business, whether it's office or inventory. And in all those cases, typically what you have is an accounts payable process and invoices coming in to you that you have to pay. What I've highlighted here is another, quick summary of expenses and payment solutions that can help you with that. There is the Brex logo on there. I won't go too much into that because I don't want to be self-serving. But, again, top two on my hit list for most small businesses would be utilizing QuickBooks or Bill.com. For your everyday accounts payable needs, there are solutions within both QuickBooks and Bill.com that can facilitate this. So both solutions have the ability to intake accounts payable invoices that you receive as a business, and they'll go about paying those. You can queue it up as an invoice that needs to be paid by a certain date within the system. And the system, because it has a connection to your bank, right? It can serve as the method for you to pay that invoice in that system itself, versus you going to your bank portal and initiating a separate electronic bill pay. You can kind of manage all of that within QuickBooks if you set it up correctly.
Quick clarification for, I see in the chat, someone asked, why not Brex?
You can use Brex is actually the answer. I am trying to be as independent as possible in providing some of the information I'm using. But if I'm being perfectly transparent, and thank you for the prompt, Brex does have a business account that small businesses can sign up for. So if you go to brex.com, you can try to onboard yourself and sign up for Brex. Brex provides two kinds of financial services products. One is a business cash account that you can use to make payments or receive payments for your business. The other is a credit card. And so for all of these situations, you know, within our, and we call our Brex operating account Brex Cash, within Brex Cash, you are able to do bill pay. You can pay invoices there. You are able to also utilize your bank account info, or your Brex Cash account info, and provide it to any of your customers, and they can remit payments to you that way as well. It also has integrations with many of the tools that I've mentioned so far, and you can receive payments that way through that account. What Brex is trying to do for Brex Cash is it's trying to be a kind of bank account alternative. It is an operating account, so it actually physically handles the cash that you have in your business. And then it built into that product are the integrations that you see here with many of the other services that we've highlighted. And I don't think, you know, there's a follow-up. I'm just trying to follow along in the chat here in Q&A. There's a question about why would you be denied for the business account? I just want to be clear. You wouldn't be necessarily denied for the business account. I think it depends on kind of your application and trying to onboard onto Brex. And we have our own process for determining who's applicable and who can qualify. But yeah, I think for a lot of small businesses, this has been a good solution in our experience so far in running the product. In any case, you know, I'll pause there about Brex. You know, for managing expenses, it's kind of very similar. I mentioned kind of how with QuickBooks, they have a bank feed feature for your business bank account or your business operating account. For that operating account, when cash goes out the door, QuickBooks will pick that up automatically. And it's the same process that you have with revenue. Cash that goes out the door, you make sure that you can classify it appropriately. You know whether or not it's for inventory or whether it's for a legal expense or for any kind of other professional service potentially. And, you know, it just kind of keeps you up to date with the financial performance and books and records of your business.
I have a question. One question about Brex integration. Does Brex integrate with QuickBooks? And then the second part of the question is using a combination of QuickBooks and Bill.com. So QuickBooks for bookkeeping and Bill.com for invoicing. What are your thoughts on that?
I think these are all solutions, and it kind of depends on your method of choice. With QuickBooks, you know, on its own, they do have certain bill pay and accounts receivable features built into the platform. Some people say that it's like, you know, because QuickBooks does not necessarily focus on that aspect of payment servicing. They're more focused on just being your core books and records and recording all the activity versus making the activity, if that makes any sense. And what I've seen with a lot of small businesses is that they'll have QuickBooks and then they'll have call it a Bill.com or a Brex on top to facilitate all of the actual payments and receipts. And then those systems will then integrate directly into QuickBooks for real-time kind of performance tracking in your books and records. I hope that makes sense. Basically, the answer to the first question about whether Brex integrates with QuickBooks, the answer is yes. So any of the activity that you have on the Brex platform will make its way into QuickBooks via the integration. I will say one more thing, and I don't want to leave out kind of this last logo here, which is for Expensify, and the general idea of a card management process if you have a business credit card. That's one of the things that can scale very quickly if you start having employees and you actually allow folks to have business credit cards or corporate cards. it's one of those situations where, you may have salespeople out there, they're out there spending for travel and entertainment expenditures. And then the typical way I think companies historically have done it is they wait for their credit card statement to come through, and then they have someone in accounts payable manually coding every single line on that credit card statement directly to your books and records. This can be very time consuming and frankly expensive, because you have to hire someone to spend the time to do that, or do it yourself, right? A lot of tools are out there for this. I think Expensify is probably the most well known. They're able to directly connect to the individual corporate cards that have been issued. And then once you have the mapping set up within the Expensify tool itself, it's the same thing. Those expenses that go through on your credit card or on a specific corporate credit card, it will flow through into QuickBooks automatically on a daily basis, which is nice because you can see the real-time expenditures that are being incurred by folks in the business. And it's also less time for you to spend. Folks on Brandon, are there any other questions that I should address before moving on to the next piece?
Yes, they'll have one about an owner of multiple businesses. What is the advice as far as getting each business uploaded into a tool platform to manage your expenses? Do you suggest using different platforms to manage that?
So one thing to note is that if you have different business entities that are each managing a different business, technically you can't consolidate the books and records of each business if they're not related or under one umbrella entity. And so what you kind of have to do is, and you can change this by consolidating or merging the entities together legally. And I would suggest speaking to a lawyer to support that. I would recommend like having 2 separate QuickBooks instances as a result. You kind of have to have separate instances of books and records for separate entities if they're not legally affiliated with each other, if that makes any sense. So I'm doing a time check and it's 30 minutes past. I'm going to keep moving, but I'm sure there's more questions that will come through, and I'm happy to answer those as they come. So I just highlighted a number of different solutions that are out there for bookkeeping. The main thing to look out for, I think, if you're looking for as an efficiency and you're looking for a one-stop shop, which is what a lot of folks in the business sphere are eventually like, that's the ideal, so to speak. You can see all of your activity, you can manage all of your payments, you can manage your business from one single place. Look for ways to centralize and integrate. When you're selecting a partner to help you with point of sale systems, make sure that that point of sale system has a direct integration with whatever your books and records are, if you choose to use the technology for that. Or just make sure that whatever the system is that you use, there's an easy way to kind of get all the detail and data of your sales from that platform so that you can input it into your books and records in as efficient a way as possible based on how you set up your business. I can't highlight enough like this experiences that I've seen or I've had and the experiences that I've seen other people have when they kind of choose their technologies and they don't all work with each other. And then they end up, logging into multiple websites or using multiple tools. And it's not as efficient as probably it could be if you were to think about the best way for all these tools to work with each other. When you go to any of the websites for the tools mentioned, they'll typically highlight an integrations page, and they'll highlight kind of like all the other tools that support bookkeeping that they integrate with. So those are definitely things that I would encourage looking out for. Okay, so all that being said, and all the different tools and information that I shared, I think there's also kind of the bottom line of if you are an entrepreneur or if you are the owner of your business or you are, your scope for your business is much larger than bookkeeping or accounting, there are a lot of tools out there. There are a lot of also accounting partners and companies out there that are online today that will help you with managing your books and records and giving you the best advice for your specific circumstances. So what I've highlighted here are a bunch of kind of online services that can do your books and records remotely. And each of them have specialties and subject matter expertise in a wide variety of businesses that actually align with what I saw were the business models that are represented by the audience today. The whole idea is that at the end of the day, if you're looking for someone to help you with your books and records, you don't necessarily have the time to look into all these technological solutions. You prefer to spend your time on growing your business, focusing on getting more customers and marketing and things of that nature. You know, there are these kinds of solutions, and I'm highlighting these specifically because they're kind of nationwide and they're relatively affordable. And you know, it's up to you. If you know, my parents kind of use their CPA in Queens, New York, and they've used them their whole time as business owners. But if they kind of started their businesses today, they may have a different outlook. Maybe they would try some of these online accounting shops because they're affordable and it's much easier to work with them. So I'll pause there before we get into kind of like the top 3 reasons to incorporate, to see if there are other questions out there.
Yeah, I do have one here, which is asking about using a CPA service versus these bookkeeping tools that we're discussing. Kind of what will you get from a CPA that you wouldn't get from a bookkeeping tool?
Yeah. So the main thing I would highlight is that when you have a bookkeeping tool, all of these tools kind of solve for what we like to call at Brex the 80-20. Typically, there's a tool that with kind of 20% of their effort, or like there's a tool out there, it will solve for 80% of your needs, of any business's needs, maybe even a little higher, but it won't necessarily solve for 100%. And so sometimes what you're looking for is a CPA that can just give you that extra educational advice or things that are specific to the nuances of your particular business model or how you like to run things. That's a scenario where, you know, and you can have a hybrid approach. You may be able to use your bookkeeping tool or any technology, but you want to have a CPA kind of in your back pocket that you can call for ad hoc advice on how to treat a certain situation. When you're running a business like this and you're thinking about your books and records like this, and you are trying to go it alone with internal resources or yourself, you know, you're going to be spending the time, you're going to be learning the process, and you're going to be developing yourself, because oftentimes this is not your subject matter expertise, right? Your subject matter expertise is probably in your business itself. You just want to have someone who can educate you on certain of the intricacies of doing that work. Just in case you have a question, just in case, you know, the internet or Googling something isn't enough, you have someone who's an actual licensed CPA that can advise you. I highly recommend, you know, if that person or that company or that CPA firm is not doing the work for you, to at least have someone that you can call for that kind of advice. And yes, I see one comment about how a CPA keeps you up to date in your tax filings, which, yeah, that's also one of the things that's really important, right? Tax compliance, making sure that you're in line with the rules and regulations of the jurisdiction that you're operating in. Okay, with that said, I'm going to move on to the next topic, which is thinking through, like, if you are a business, the legal structure of your business, and what are the top reasons to incorporate if you haven't already done so. So I think the first thing to note, and it's important because it's a fact of life, when you are running a business and you incorporate, one of the main benefits is that there's a separation of liability between your personal assets, and this includes your bank account, your car, your home, or any other assets that you may have, versus the assets of the business. And this is one of those situations where you're just trying to keep out of reach your own person. You're protecting yourself, right? In case something goes wrong with the business and you may have a creditor that is, looking to kind of get back whatever they can from a piece of debt or anything like that, your personal assets would then be out of reach for that creditor on a legal basis. So one of these things, one of the main reasons for incorporating is kind of protection of yourself, protection of other investors that may exist for your business. And that's probably one of the number one things here to highlight. The other thing to note is the tax advantages. So when you're a sole proprietor or you're running your business as a partnership, there are certain tax benefits for that. But there are also certain things that you would avoid and certain deductions that you would gain for your taxes if you were to incorporate. One of the main examples of this is self-employment taxes. So self-employment taxes of roughly 13.3% apply to all those who are in those business models or legal entity models. When you have an incorporation, instead of recording all of the business profits of your business in your individual tax return, you have the opportunity to pay yourself as an employee of that business and then avoid the double tax of self-employment. And on top of that, you can kind of also pick and choose when you want to dividend out like monies to yourself and be able to do some more extensive tax planning and managing your finances over a longer period of time. Another thing to note from a corporation standpoint is that if you are a corporation, sometimes it's an easier way to raise money for your company and to capitalize yourself. If you have a C Corp, for example, or even an S Corp up to a certain limitation of 100 investors, you can sell your shares and then you'll be able to also afford all of your investors those personal liability protections, right? Whereas if you're a sole prop and you add another general partner, the same rules apply in terms of flow through and a lack of limitation on protecting your personal assets for both you and the partner. And although like as a C Corp, it is more costly to set up and maintain, right? There's a lot of other, I would say, there's a lot more flexibility in what you can do with your business over time. So one of the things about having a sole prop is that if you have the sole prop, that business is you. And over time, over a very extended long period of time, right, that business kind of lives and dies by you. Whereas if you have a C Corp, you have the ability to sell your C Corp more easily. You have the ability to pass it on to others that you work with by passing on the shares or your family, et cetera. And those are all things I think to consider just in the long run of any business. And I just want to just be fair, like, because they're also like, because I do want to talk about sole props and some of the tax advantages there. It is true. If you're a sole prop, it's a much easier tax filing. There's no corporate tax specifically, so no double taxation as there is for C Corps. So although you're saving on the self-employment tax, there's the general double tax that exists for C Corps when the C Corp gets taxed. And then if you dividend out money to yourself from the C Corp, that will also get taxed from a dividend perspective. And there are certain other great tax deductions that also exist for sole props, which is, the potential to deduct health insurance for yourself, your spouse, and your dependents, and certain other deductions as well. I see a few questions here. I will try to go through a few of them. So one question is just DBA. And what is DBA? DBA is just the business name of your company. So you may have a legal entity name, and I'll tell you the legal entity name of my parents. My parents started a company. It's called Easy Chow LLC. And that is the legal entity name, but they do business as Walk and Roll, which is like the walk that you cook with in Chinese cooking, and roll. And so, their storefront says Walk and Roll at the top, but their legal entity name is Easy Chow LLC. So when they file, certain compliance records, they kind of file their name as Easy Chow LLC, DBA, are doing business as Walk and Roll. So just to just to clarify that. Let's see, there's some folks ask about S Corp versus a B Corp. I'll be completely honest, I'm not as familiar with B Corps. But if you are curious about an S Corp is a type of entity that you're able to issue shares to investors to, but there's a limitation on how many. And that limitation is to, I believe it's 99 or 100 shareholders. And one of the things about an S Corp is that it retains some of the protections that exist for C Corps, but that you still get pass-through income, which is valuable for certain business owners and how they plan out their taxes. Let's see here. And the last bit, the number 3 thing I'll highlight for why you should incorporate, the concept of brand legitimacy. And so this is one of those situations where sometimes it's easier or you're more likely to be taken seriously as a business owner and have more credibility in the community. This is also a way to be able to hire more talent or employees, and especially in a current environment where there's a lot of competition for employees, some employees are more likely to sign up and work for a incorporated entity versus a person in a sole proprietorship. And then in general, like I think if you have an incorporation or a brand attached to that corporation, people feel a lot of loyalty to the brand and companies, and that's sometimes different than the relationship that you may have with the sole prop. And building the brand also means that it's building an inherent value in the business itself, and it allows for a lot more options in terms of the succession of your business and where it goes from there.
So I see a question here. Does your business revenue dictate the entity filing?
No, the type of business model that you have does not dictate the kind of legal business entity that you should structure yourself under. Although depending on your business model and how you operate your business, right, in terms of your operations, that has a higher input into what kind of legal structure you should operate under. And yes, I see something about incorporating and how that brings loads of government funding eligibility. That is 100% true. My parents run a restaurant, and they actually ran a Chinese restaurant in an airport. They're in Minnesota, actually. So they had a double whammy. They kind of had the whammy of running a restaurant during COVID, and then the fact that the airport was deserted because no one was flying for 9 months after it shut down in March of last year. But they were incorporated. And so because of their incorporation, they were able to actually access the PPP funds that were issued by the government from the CARES Act last year. And there are a lot of other government subsidy programs and the like that they've been able to access to as a result. If you're a sole prop, it's been a different scenario, I believe. Let me see here. So that's kind of all that we had in terms of the presentation from a Brex perspective. I believe there might be other questions that are popping up in the chat, and I'm happy to engage in a further discussion on those.
Yes, I do want to kind of backtrack. We were talking about CPAs, and there was a question about, how do you source a CPA? Kind of what are you looking for? How do you screen? Is there any directories that you know of? And kind of advice on those introductory moments when you're screening a CPA for your business.
So the main thing I would care about, and this goes with any service provider that you have for your business, there's that person's subject matter expertise at its core, which is, I think, for a CPA, the accounting, bookkeeping, tax planning, tax compliance, things that they will provide for you and your business. That should be agnostic to actually your business model, right? But then what you're looking for on top of that is when you're working for that person, how much familiarity does that person have with what you're trying to accomplish for your business? And that's really important because that means your CPA will have context behind a lot of the decisions that are being made that you're making. And he can then supplement that with actual accounting and financial advice to help you keep your records straight, be tax compliant, potentially save on taxes, and potentially even grow your business. There are certain situations where they're able to help with that as well. So it's really about the person. It's really about knowing the person that's going to be providing the service to you, how much that person understands your particular business model, and kind of probing those questions when you're assessing all your providers. And then from there, I think you have a better chance of picking the right one for you. In terms of like a directory for CPAs or bookkeeping services, Brex actually keeps an accounting portal of different partners that we recommend for these kinds of services. So if you go to brex.com and you go at the top, there's, I think, an accounting link or button at the top. If you click on there, we have a whole directory of services kind of all across the country that will do, CPA bookkeeping work for you. And it ranges in complexity from someone you just need to just do your bookkeeping on a weekly basis, maybe help you run your payroll, all the way up to audit firms that can sign off on your books and records and prepare financial statements and the like. And thank you, Bruce, for putting the link in the chat.
Follow-up to CPA question is, as a small business owner, should I be prioritizing a CPA or a tax attorney?
What was the CPA or what?
Or a tax attorney?
So a tax attorney is someone that you would need if you think you're going to run some kind of tax compliance risk or some kind of technical tax item that will apply to you. For those situations, it's kind of more about tax law versus tax everyday run-of-the-mill tax compliance work and filings that a CPA would do. I would say 95 times out of 100, a CPA will do it for you. They'll be able to not only manage your tax compliance and things of that nature, but also do other work such as your bookkeeping. So I would recommend that most of the time without understanding the specific underlying context of the question. And I'm happy to answer any questions really about small business also, even if they're not related to this particular deck that we presented. Happy to do that as well.
Brandon, hey, Eric, this is Philip here, USBC Programs Manager, and I do have a question. You went through incorporating, and you described each one of the benefits of incorporating your business. I wonder if you could share with us, Eric, is there some type of a roadmap that our small businesses should follow? Or is there some type of a trigger that lets them know that they should take it to the next level and incorporate? Is it revenue based? Is it the level of risk that they associate that's associated with their business? What are those triggers that lets a small business know that they should go ahead and step it up?
So one of the one of the definite things that you should look out for or that you should consider for incorporating is, let's say your business is growing. Let's say you're a sole prop, right? And I saw a question in here about $50,000 of revenue a year. At a certain point, you may look for additional capital. And you may look for additional capital to support your business, whether it's through the credit markets, and that could be a credit card or a bank loan, or it could be having someone else put an equity stake into your company. When that situation happens, I would recommend at least thinking through whether like incorporation, because now you're scaling your business with other creditors and other stakeholders. And you want to figure out a way, especially if it's on the creditor side, putting up a wall between the assets and performance of the business, and then also protecting yourself as an individual. And it's one of those things that, although you never want it to happen. And I think it's like, you don't expect it to happen necessarily. Things change, COVID happens, business, like, financial crisis happens in '08. There's a lot of things that happen in the economy that you're not necessarily in control over that still impact your business. And having that incorporation status when you have those other stakeholders can be very protective of you. And frankly, oftentimes doing the incorporation work is not that costly. There are a lot of services out there like LegalZoom that can help you with that online. And I think, there's there's a bunch of other services on there, and we could probably send out some information related to that after the webinar for the attendees here. It's actually not as difficult as some may think to do so.
Okay, thank you for that. And I know that there's some other questions that are coming in right now, but I want to go back to the first portion of your presentation as well. And I think that, there's a lot to be said about managing your expenses and sort of monitoring your cash flow. Can you talk to us about some of the tips and tricks that folks should be using in their businesses to monitor their cash flow? How often or how frequently should they be assessing their cash flow? Should they look to cut costs monthly, quarterly, and then what's the cost benefit of, applying this extra effort to sort of watching your cash flow?
100%. So, I mean, my dad, he runs a restaurant, and he likes to break down his business at a very high level. So, he sells meals. He sells Chinese meals, like 2-item fried rice. It's like literally just like that on a steam table. And he thinks about all the costs associated with creating that meal. There's the employee labor, there's the food costs, and there's the lease expense that he has to pay for his space. And for those situations, he likes to manage his costs by thinking about, okay, I want to maintain, call it a 30% margin on top of those costs. And if that's the case, my lease expense can't be more than, call it 25% of my revenue. My food cost can't be more than 30% of my revenue. And my labor cost has to be the remainder, like so 70, like 15% or something like that. Now, these are conceptual numbers that I'm putting together. They're like, it's just to illustrate a point. But it's thinking about, okay, if I am going to incur $1 expense for my business, any dollar that I expense, do I think I'm going to get a return on that dollar? And depending on your business model, right? Like, I've heard of some people say, other folks that I work with, for their businesses, they say, okay, if I'm going to spend this $100 here, I only am going to approve spending it if I know that over time I'm going to get back a 400% return. Like, sometimes it's like that, and so it's really thinking about, for your business, what are you going to get back for that dollar spent? And then tracking it is kind of using the tools that I mentioned, because sometimes those expenses occur regardless, and you're kind of looking at things in retrospect after they've already been charged, in order to maybe get to the answer of how much return you should expect on every dollar. That's also one of the reasons why you should have your books and records in order. When you have them in order, you can see historically what kind of dollar return you have been getting on the expenses that you've been paying. And then you can maybe see, like, well, maybe I can still get the same revenue and spend less. Or maybe the answer is like, shoot, like, I have to pay my employees more, because if I don't get my employees in the door to support my business, I'm not going to have any capacity to serve customers that I want entering into my storefront. So it's kind of thinking about it holistically like that.
Now I got to take it a step further. How often am I doing this? How often am I thinking about that? Am I doing this on a daily basis? Am I doing this, at the end of the week? What's a really good rule of thumb to examine these costs and cost behavior?
Yeah, without putting like a direct timeline or expectation for every time you do it, I think the more mature a business is, the more likely that you'll just have like a monthly cadence of looking at your performance over the past month, perhaps comparing that month's performance to the performance of your month last year or the month before, and looking at trends that way. I think early on in your business, when you're just getting started, it can really go in one of two directions. If you have a lot of volume, you may want to be tracking weekly. You should at least keep your books and records up to date on a weekly basis, if not daily. But then in terms of like tracking performance and looking at improvements, if you're just starting out, you may want to do it more often, just to see where you should go in terms of business strategy and how you can improve, because you're just starting out, right?
I appreciate that, Eric. And I'm sorry, I was selfish there. I'm going to yield the next 3 minutes, Brandon. I know that there are a ton of questions that came in. The questions that we don't get to, we'll get packaged up and put them into a post webinar email. So Brandon, please take the next two questions.
Yes, I'll paraphrase a few of the questions that came in, and it's Brex related. It's asking about how much of the tracking your funds process is automated with Brex, from bookkeeping to invoicing to the business credit card side of it to cutting checks. How much of that is automated, and the integration tools with other credit card companies and Brex as a spend management software?
So Brex's platform is very friendly, I think, to early stage businesses and small businesses. We cater to kind of having a system in place where you can make your payments on Brex Cash, which is again our kind of business operating account, or utilizing your credit card to make certain payments. And all of that activity automatically feeds into your QuickBooks instance. Now, we do not integrate with every single accounting platform that's out there. We again try to just integrate with the ones that are most popular. So the one we definitely integrate with, and that works very well, is QuickBooks. Another system is Zero. And then I'm not sure how many folks may be interested in this, but there's also NetSuite, which is an Oracle platform. Like NetSuite is the system that Brex has its own books and records on, and we integrate with that as well. And so if you're just looking for a simple yes or no answer as to whether or not Brex integrates with accounting software, the answer is yes. And then to just be more specific, my expectation is that most of the time, small businesses are utilizing, or early stage companies are utilizing QuickBooks or Zero, and we integrate with those as well.
Well, I think that's all the questions we have here.
And just to do a time check, there's about 2 minutes left. And so I appreciate everyone's attendance at the webinar today, and I humbly thank the USBC for letting us present this webinar to their constituents. And I'm just honored to be here. So thank you guys for listening and asking questions and being engaged.
Erik, Brandon, on behalf of our president, Ron Busby, on behalf of our board and our staff, want to thank you all for delivering such timely and valuable information. I also want to thank the behind the scenes support, Bruce Johnson and Vince Cogan, for zooming in and giving us a hand today. And then also want to just really, give you all a special thank you, because this is some very valuable content that we're recording now, and we're going to share this later for those folks who could not be in attendance. And so what we'll do is we'll make sure that if any questions pop up, we'll get those over to the folks at Brex, and we'll try to get those answered and get those back to the folks at Watch. And so with that, we have run short on time today, but I want to thank all the folks in attendance. I want to thank you all for tuning in to what Brex has to offer to the USBC and to their customers in general. And want to make sure that you all continue to stay engaged, stay plugged in with USBC programming and future content. We certainly do appreciate the new relationship we have with Brex, and we're looking forward to many, many more opportunities to work with them in the future. So with that said, Brandon, Erik, Bruce, Vince, and to all of our folks in the audience, I thank you. Y'all have a great, great day and a great week. Thank you.
Thank you.